break the goals down into more achievable, aspects. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So I was talking to a trader the other day, or messaging a trader the other day. Well, what he wanted to do was get really aggressive with his trading strategy and use some aggressive risk algorithms. And so we were working through the numbers, and he was trying to figure out, he kept coming back to this point like, oh, my system's not good enough. Oh, my system's not good enough. And what I was trying to share with him is that actually your system's pretty good, but what's happening is when we tweak the risk so much and get really hyper aggressive, it's leading to likely drawdowns that are going to freak you out. You know what I mean? I think we confuse as traders this idea of the system's no good when really we put that label on it, when really it's more that the way we're trading this system is making it no good for our appetite for drawdowns. You know what I mean?
Yeah.
Do you know what I'm saying?
Yeah.
Does that make sense? Have you ever had that? I've had that happen lots of times.
Oh yeah, for sure. I mean, I think there's also this idea that if you get a result at a certain risk amount, like maybe 0.5% risk, same results are going to scale up if you risk 5%. And it just doesn't work like that. I mean, your drawdowns are going to be more. And like you said, obviously the psychology is going to be different. And sometimes systems just blow up when you increase the risk that much. And I think that's what people need to understand, in addition to, tailoring the drawdown to their personality, right?
Yeah, it's exactly, you know what you reminded me of when you said that? It's exactly like saying, well, if I got from here to Las Vegas in 10 hours at 100 miles an hour, I'll just go 200 miles an hour and I'll get there in 5 hours. You're going to die, right? You're going to die on that 45 mile an hour turn. It's over. So yeah, it's the exact same thing. It's exactly what you said. That's totally it. That's trading, thinking that everything is completely scalable. And now actually, I learned that lesson really early in terms of strategies, because one of the guys that was sort of getting me into trading and stuff, and he wanted to work with me and my friend in trading and sort of start bring in investors and stuff. And he was like, is it scalable? That was his main thing. He worked for a broker, so he understood this idea of, is it scalable? Is it scalable? And he kept pounding on this. And I was like, man, what is this guy talking about? But I realized what it was, because some strategies, they really only work at a certain size. You know what I mean? For example, if you're scalping the euro or whatever for 5 pips, you're actually going to move the market. I mean, you're going to move the Forex market if you have too much size there. You know what I mean?
Yeah.
You actually won't be able to get into all your position. I know people think about this more in terms of stocks and trading shares and that sort of thing. But it's actually, and I saw a really good presentation on this from the guy who founded Awanda. His name was Richard, and he was Richard Olson, and he was I don't think he has anything to do with Awanda anymore, but he sold out his part of it. But he was showing all this data. He had tick data going back to the 80s or something. The biggest takeaway I got from it was, wow, it doesn't take actually that much to move the Forex market. We think of it as this big, massive, and he's like, no, he's like, so if you're trading 10 lots or something, 10 standard lots or whatever, that's enough to actually really push it, And I found that fascinating, that whole idea. Yeah, so this idea of scalable and it just, maps on perfectly. Obviously, that's not the case. And we often confuse whether or not it's the system that we don't like or the risk parameters that we've placed on the strategy, on the system. And that leads to drawdowns that we can no longer withstand. I mean, that's the one thing I try and get across to people, is that psychologically, your biggest issue is going to be dealing with the drawdowns. So you may as well upfront go, all right, what is the drawdown I'm willing to withstand, and what is the drawdown I'm willing to draw the line and say, I'm done. And so now you need to do everything possible to avoid that drawdown where you say, oh, I'm done. I can't do this. I can't sit through a 35% drawdown. That's impossible for me to do. I know that, so I'm not going to do it. So you need to know where that is before you ever start trading the strategy. That's the key thing. Yeah.
Yeah, sure.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And I think one thing that people think of also is that I need to increase my risk, or I need to increase the return because I can't make a living on whatever it is, 1% on $10,000, which is all they have in the account to trade, right? The reality is that maybe you just get an investor and you get more money or whatever it is, but you can always somewhat scale that up. But I think thinking that you only are limited to what's in your account and the return on your system is kind of like, you're kind of throwing away a good system when it could be useful.
Yeah, absolutely. Yeah. And that idea, that 1% that you said, that the first traders that I came across, there was this group in London, and my friend introduced me to them, and they were, what their goal was every week? They had a very, very simple goal. Every week they just wanted to make 0.75%. That's it. That's all. And some weeks they'd lose 0.5% or whatever, or 1%. But they wanted to average every week 0.75%. That was it. That was their goal. It was just boom, boom, boom. And you would be amazed at how quickly your account grows if you can do that. Even if you can only do 0.5% a week, if you just keep that money in there, and if you're able to compound it and you don't have to pull it out, you'd be amazed at how that can grow. It's it doesn't take that long actually. So it's going to grow faster there than in the bank. That's for sure. So yeah. Yeah. So, that's the thing, is that sometimes you do have to take a step back and go, okay, well, I'm not going to be super aggressive. So what can I do? And maybe that's what you can do, is just take it, break the goals down into more achievable, aspects and more achievable steps. Yeah.
Yeah. Cool. Good advice. All right. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.